No. All right, what's up, babes? First off, thank y'all for giving me your Saturday morning and for the reschedule. Definitely we're supposed to see y'all Wednesday. Appreciate it. We was ripping and running down the highway, just wasn't gonna make it back. But it gave me more time to dissect what happened at the FOMC meeting, which is absolutely what I wanted to talk to y'all about. And then it went well with prestigious. I heard, I saw the good stuff and all of that. So today what I want to break down is FOMC and the Fed because this plays a major role in how the economy moves. And we always talking about Fed decision Wednesday, Jerome Powell Wednesday afternoons, Jerome Powell speaking, oh no, like all this stuff, right? But I really want to dive into the who, what, when, where, why of it and how the markets react and why they are. So the FOMC, it stands for the Federal Open Market Committee. And if you've never heard of it, well, we've all heard of it, but if you don't really know what it does, that's what I'm going to walk you through on the basics for it today. So let's get to it. Now, why? Because who, what, when, where? Well, the who was is the Federal Open Market Committee. There we go. But then the why does this matter is the FOMC, they make decisions that are literally touching every part of our financial life. So from the interest rates on our credit cards, car loans, whether the investments are going to go up and down, FOMC is involved. And they respond to things like inflation, then unemployment, and then world events like wars or pandemics in that order. When they speak, we listen as investors and as traders, but I want us to be investors before all else. So if you've never heard of them before, just child, they shape everything. How much we spend, save, earn, all of it every single day. All right. And it's actually quite disgusting if you think about it. Everything and those mortgages. I was just talking to somebody yesterday about why do I still live in Arkansas? Because I got locked in at a 2.5%, 3% on my home. I'd be silly to leave. I'd be mighty silly. And at the time, the home loan was 175. Not gonna find that anywhere else. Not right now. Not with those interest rates. So I'm here to stay in Arkansas and I'll just get up and travel every other day. All right. That's the best I can do. Now, the FOMC is a group of 12 people who vote on the economic policy. So anytime that I think about the FOMC, I picture Jesus. Y'all know that picture when Jesus is at the table with his disciples, the Last Supper. That's a lot of decisions was made at that table. I'm not being sacrilegious. I'm just telling y'all that's the visual that I get in my head. And maybe we could go with jury too. It's 12 people on a jury, right? Yeah, okay, cool. We can go with that too. Now, 7 of the 12 are called governors. They live and they work in Washington, like in DC. There's only one permanent seat, and that's held by the president of the New York Federal Reserve, right? That is the only permanent seat, the president of the New York Federal Reserve. So now we got 8, because 7 of them are the governors that live in Washington. One has a permanent seat in New York, and then the other 4 seats rotate among the 11 remaining Federal Reserve banks. So there's, ooh, Lord, there's the ones I can remember is Atlanta, St. Louis, San Francisco, Washington, and New York, of course. There's one in Texas, like the Federal Reserve banks. So like I said, the last 4 seats, they rotate through those 11 right there. Now the head of the group, we already know who that is, Big JP, Jerome Powell. We hear his name all the time. He's the chair of the Federal Reserve, which means he's the spokesperson, the face of the Fed, and the main decision maker, and apparently a big loser if we go with what our president says. So behind the scenes, they're backed by economists and analysts who crunch the numbers. And check this out. These are the same analysts who, when we pull up to see what is the analyst rating for Apple, the 12-year price target for Apple, is this strong buy or a strong sell? These are the same analysts that are backing the Federal Reserve. Let that sink in. Just let that sink in, okay? They're responsible for guiding how fast or slow money moves through the economy. Now, what does the FOMC do? I'm just going to say committee from here on out. What does the committee do? Their main job is to adjust something that the federal funds rate, and that's just the interest rate that banks charge each other when they lend money overnight. But even though it's between banks, it affects everything else. Like we said, credit card interest, home loans, business loans, freaking student loans. So when the FOMC raises or lowers that rate, it makes borrowing money more expensive or cheaper for everybody else. But they also manage other things like buying or selling government bonds. Let me know in the chat if that just clicked for you right there. Like, oh, is this why Trump has so many issues with the bond market right now? Yeah, because he cannot control it. Yeah. And all of this stuff with the committee being able to control it, it's controlling how much money is flowing through the economy. Their goal is to keep things stable and balanced. Is that what we see President Trump wanting to do right now, or do he feel like he needs a little bit more money? Y'all need to stop telling me I'm on a budget. That that sound a little bit like it right there, okay? So the easiest way to understand what the committee does is to think of them like a thermostat. If the economy is getting too hot, it's a little too toasty in here, it means that prices are rising too fast and people are spending too much. If they raise interest rates, or they raise the interest rates to cool things down. So if the economy is freezing, like a polar bear, my background. If the economy is freezing, like it's the North Pole, okay, like during a recession when people aren't spending and jobs are being lost, they're going to lower the rates to warm things back up. So they're constantly adjusting the temperature so that we don't burn up or freeze. You know what I'm saying? It's tricky. They walk a tight line. Come on with the mortgage rates ain't to play with for sure. Look, she says, stay there. You hear me? This explains all his fits and extra beef with JP. Exactly. Exactly. And so we love to see that they clicking. And then it makes me feel comfortable to keep going. Like, okay, period. Oops. All right. Now they have 8 scheduled meetings every year. And so that's about once every 6 weeks or so. And each meeting lasts 2 days. Typically, we only care about Wednesday because that's when the decision is announced. And then Jerome Powell has his little speech and whatnot, or his big speech and whatnot. But it's a 2-day meeting that starts on Tuesdays. On the second day, 2 p.m. Eastern, we already know, they release a statement saying what they decided. And then at 2:30, Jerome Powell holds his press conference to explain the decision and answer the questions, or most of the time he don't answer the damn questions. So if something urgent is happening, they can call emergency meetings too. And we saw many, I think there was 2 extra emergency meetings in 2020. And then in 2008, there was a lot. There was a lot. I'm pretty sure that there was a FOMC meeting every month in 2008. But y'all fact check me. Go back and fact check me. And if I was wrong, let me know. So I'll be right next time. I can't remember right now. But usually it's these 8 set dates, and the market watches those dates very closely. They meet in Washington. They meet in Washington, D.C., inside the Fed Reserve's headquarters. And what's that place called? I couldn't remember yesterday, like where you go in Washington, D.C., where all the monuments are. I just always say where Abe Lincoln is. Over there. That's where the Federal Reserve building is on Mariner. That's probably Miss Patrice telling me. The, see, the National Mall. Yep. Yes, so that's where that's at. It's over there. Okay. Sometimes the members join virtually, but most of the time they flying in because it's free vacation. Why not? After each meeting, they'll also release a summary of what was discussed, and that's just the meeting minutes. And that comes out about 3 weeks later, and it gives us a deeper look at how the group is thinking. So a lot of times we'll have it's the Fed rate decision meeting day, Jerome Powell day, right? And then 3 weeks later, people will look at the economic calendar and they'll say, oh, wait, I thought we just had a Fed meeting. So this is every month? No, no, no. Now they're giving us the minutes. Now we get to go in there and read verbatim what was said. Yeah, we get to go in there and think like that. And we can just see like how the group is thinking and whatnot. Now, the point to all of this, because there is a point, is the Federal Reserve and the committee specifically was created to keep the economy healthy. And Congress, when it was initiated, gave them 2 main jobs called the dual mandate. All right. Very important right there. The dual mandate is so flipping important. The first part of the dual mandate is to make sure that prices are stable and, so they got to keep inflation under control. The second part is they need to help keep people employed. I'm saying it again. The first part of the dual mandate, they only got two things that they need to do. They need to keep inflation under control and they need to make sure that a majority of people in this country have a job. What y'all think the Fed is doing? I mean, how y'all think they doing on that? On the dual mandate? Good, bad? I'm waiting to see. Which one y'all think? That's interesting under this administration. Period, period, period. It's very domino effect. Tightrope, tightrope, tightrope. If prices go up too fast, it's a problem. Because if too many people are losing their job, that's a problem. Too many people losing their jobs, which means that so we're just gonna go with Walmart. And I'm kind of specifically talking to Cherish here because I know y'all got it, but let's go with Walmart. If everybody's getting fired from Walmart, it's not because they don't need people. It's not because they want to shut down more registers. Is that they're spending more money um putting things into Walmart. They're spending more money shipping the clothes over here, shipping all the electronics. We talked about like tariffs and stuff. Yeah. So since they're having to spend more money doing that, and then they raising the prices, which is making us shop there less, the only way where they're gonna be able to save some money as a company is by stop paying so many people. So that's why there's, you ever heard us complain like when we go in Walmart, and be like, dang, it's only two registers open. That's why, because inflation is terrible. So they got to cut costs somewhere, and they can't cut the cost on the stuff that we buying. So they instead just fire people. They stop hiring as many people. But that's not good. If more people don't have a job when prices are getting expensive, more people are going to be in debt. So basically, they screwed us, girl. Basically, not us though. We we really okay. Not us, but yeah, they're basically just out there here just screwing the people out. And the goal is to keep inflation around 2%. Y'all already know we so far past that. We up here at 4.5% is actually quite disgusting. Um, when the FOMC raises or lowers interest rates, what happens? Your mortgage could go up. Student loan interest could go down. Your savings account might earn more or less. And if you're a business owner, oh my God, your ability to borrow capital is going to shrink. It will shrink. Oh, y'all heard. Oh, okay, my bad. Yeah, not us. I just had to make sure she know we good. We good over here. Yes, I'm having a hard time borrowing. That's why I'm out here in these streets with these people. That's why you saw me. So, anyways, we'll talk about that later. Okay. Now, as an investor, the stock market is gonna get shaky or excited. It depends. Confidence in the economy is very influenced by what the FOMC says and what they do. So consumer sentiment, it will very much so follow whatever comes out in those minutes that come out. All right. That's what, because consumer sentiment always comes out after the committee's meeting minutes. It's fascinating how they order this data to come out, or the order that the data comes out, I should say. And I think just understanding understanding all of this helps you to better manage your money and your time in the market because you know when to back up. You know when to back up. Everyone sticks to to Jerome Powell Day, the Fed rate decision day. And they're like, oh my God, there's going to be so much volatility. I'm excited for the Fed week. Not me. I want the week after. Because now they're about to start announcing all the stuff with housing and building permits and unemployment numbers. That's when it gets real. That's when it gets real. Because this week we found out, oh, y'all not gonna lower interest rates? Okay. Next week we get to see housing permits or building permits and housing starts. So if there are less permits being filed and less homes being built, and they just held interest rate steady, baby. I'm scared. I'm scared. And I'm also going to go straight to the industrial sector because it's about to make some money. You know where to go keeping up with this stuff. Yeah. Listen to, watch the news. You know what I'm saying? Watch the news. It's all right. But let's talk about some of the people that's leading the show right now. We already know Jerome Powell, the Fed chair. He's the most visible. Usually he's very careful, steady, very cautious, all this stuff there, you know. Then you got Christopher Waller. He's there for jokes. I ain't gonna hold y'all. That man there for jokes. He's one of the 11 governors, and he's usually more willing to cut rates early. I don't know. All right, yeah, the man ain't never wanted. He's what we call dovish. Now Loretta Mester, I really feel like her grandma and her great aunts raised her because she is what we call hawkish. Okay. So think about like a dove. When we release a dove, we're hopeful. When you see a hawk, you know that they circling around waiting on that moment to attack. So Loretta was born in the South, raised by her grandma and her two great aunts in the same home, and she just don't play. She second guesses everything. Everything. She prefers to keep rates higher to control inflation. She feels like we already screwed. We might as well just admit that we screwed and tough it out for the next couple of years. Loretta was born in the South and raised by her grandma, okay? And the two great aunts in that same house, and she has burgundy red nails. True fact, look up a picture of her. You will see burgundy, long red acrylic nails, okay? Loretta wants them interest rates up. That is very important for y'all to know that. Loretta wants them things up. Now, John Williams is the New York Fed, and remember, he's the permanent seat. And he's balanced. All right, cool. He lives in the gray. It's like, what's the facts? The facts are black and white. I'll make my decision somewhere in the gray. And them three people, well, four really, because we're gonna include Jerome Powell in it, but they are a very balanced, very, very balanced voices on the market, and it was intentional to put them there, right? They do, the board members, the 12 board members, they do want them to be, this isn't accurate how I'm about to say it, but just as an easy way for me to explain it, the committee is built to have half, a third Republicans, a third Democrats, and a third centrists. I put it like that. Not actually, but y'all know what I'm trying to say? Let me know in the chat. But it is built to be a third Democratic, a third Republican, and a third centrist. So that is just a balanced, a diversified committee. I said, there we go. That was probably better. You need balance, especially when they're the ones who are deciding what to do with our money. Now let's talk about this dot plot, because this is what I'm going to need y'all focused on this week, because that dot plot chart this week, I said, oh my goodness. So every few months, the Fed publishes the dot plot chart, and it's just a chart that shows where each voting member thinks interest rate should be over the next few years. And it's anonymous though, okay? We can see the dots, but we don't know who is who, but it gives us a visual of how aligned or divided they are. So it's not a promise, but it is a window into their thinking. And if most of the dots point to lower rates, then guess what? You need to go ahead and expect that rates are going to get cut. And then guess what? You know what sector, what you need to be invested in, and what you need to go ahead and take profit on. If the dots point up, that means that there's more hikes coming. Guess what? You know you need to go ahead and rebalance your portfolio and go over there to the staples. You need to go on and go over there. Now, typically, we would want to, when we're diversifying ourselves, if the economy is balanced and it's doing well, we would want to go to the energy sector. Right now, you better stay the hell away from the energy sector. If all them dots are starting to point up, y'all go check that dot plot chart out. All of them are starting to point up. You might want to leave energy alone, because that's one of the driving factors that brings the economy down, is the price of gas. I could cry, to be honest. It cost me $95 to get back and forth to Texas, and that's just ridiculous, to be honest, because I could get a plane. I could fly from Arkansas to Dallas, and it'd be about $120. It's crazy. It's crazy. Um, okay, now let's talk about the meeting that happened Tuesday, Wednesday. Um, the dot plots chart showed that most members expect two small rate cuts before the end of the year. Before the end of the year. We halfway through the year. So quarter 3 is the get the kids back to school quarter. Quarter 4 is get the kids all day Christmas presents and vacation quarter. That's when y'all want to cut rates? Interesting. A few of them think we won't need any cuts at all. And that tells us that there is a very I don't want to say specific, what do I want to say? There is a very obvious divide and disagreement inside the Fed about how strong or weak the economy really is. And I'll just go ahead and say it. Half the freaking committee is in whose back pocket? Oh, okay. You know. So when the Fed is split, the market gets nervous. We're gonna see things like VIX just whiplash. We're gonna see things like the fear and greed index whiplash because the mother suckers who are controlling how much we do and don't have to pay can't even come together and make a balanced decision or a majority decision. Y'all, we can we're screwed. When the okay, uncertainty about the future, it just makes it hard to plan. It makes it very hard to plan. In the most recent meeting, they decided to leave interest rates exactly where they are, between 4.25% and 4.5%. Powell said that they're being cautious because of the rising prices linked to the new tariffs. So he pretty much said, I can't do nothing because the person that you put in office keep doing too much. And in the words of the great, the shady, the petty Phaedra Parks, Jerome Powell said, I do too much because you do too little. Or I guess that's what Trump say, actually. Never mind. Yeah, that's what Trump be saying. I'm doing too much because Jerome Powell doing too little in his eyes. So basically, extra taxes on imports, all of this stuff. He analysis paralysis. Because every time they've had a meeting under this administration, the tariffs have been at a new level. They either extraordinarily high or he cut them or he paused them. How the heck can they decide how to manage what we do from there? What can they do? Not too much. He didn't sound, as in Powell, he didn't sound in a hurry to cut the rates. Like, honestly, they lowered the number of cuts that they're expecting this year. They started off last year, quarter 4 last year, telling us that we should see 3 rate cuts this year. Interest rate should have went down into like the 3 3/4, like 3.75, something like that, right? Now they lowered the number of cuts from 3 to just 2, and we only got 2 freaking quarters left in the year. So now y'all gonna cut rates, which is going to heavily affect inflation during the 2 quarters that we spend the most money. Oh, sound like we know where we need to invest at, you guys. What swings to go ahead and get in and hold on to until the end of December. I'm just saying what I'm saying, and what I'm saying is accurate. Okay, so he's flexible but not rushing. Now, oh, does somebody have a question? Okay. All right. Now, what could happen is most experts don't expect a rate cut in July, but it's still possible. September is more likely if inflation continues to cool, which means that we need to be watching CPI and PPI. Y'all know I put that reel out last week, but we're going to go look at it again. We have to watch CPI and PPI. Those numbers have got to be lower if we expect to see another rate cut. If CPI comes in higher than expected and higher year over year, not only will they more than likely keep the rates the same, it's also a really good flipping freaking chance that they might even raise interest rates back up. CPI and PPI finna shake it up. What we see next, okay, is gonna go crazy. And then also jobs data, because remember, that's the dual mandate. Keep inflation balanced, make sure folk have a paycheck. that unemployment data that comes out, we have two unemployment data reads from now until the next Fed meeting in September. We must watch like a hawk, like we Loretta Devine or whatever that lady name is, okay? Now, one big event to watch is going to be the Jackson Hole Symposium, and that's in late August. And that's where all the bankers meet up and they give speeches like, well, I'm JP Morgan and my family came over on the Mayflower. Well, I'm Morgan Stanley and all the credit cards want to work with me. Oh, yeah, well, I'm Goldman Sachs and all the hedge funders love us. Yeah, they just get up there and they get a little speech about who they are, what they're doing, and all that good stuff. Okay, cool. Now, in the meantime, whatever that lady name is, in the meantime, the data, like I said, inflation, job growth, and spending, this is all going to shape the next decision. So we want to watch it because, yeah, the news does align with the chart. I understand that. I'm never going to deny that. Yes. If I see that XLE, the sector ETF for energy, is traveling all the way down to a low on the monthly chart, in the back of my head, I understand, oh, shoot, war finna pop off or something. Oh, y'all got something going on. I understand that. But I also don't like to just sit there and be like, oh, well, XLE's at the bottom. Oh, shoot, there's a war going on. You now you're just looking up and you still late because all you was worried about, and yeah, man, I'm being specific. Y'all know him. I already went and we've had lots of conversations about this. You just because you want to make sure that you're the first on the chart, now you don't put yourself last in the with the economy and with what's actually going on around you. You're gonna be late getting there. Unless you're just watching all 9,000 stocks on the market, how do you know? You're not gonna know where you're supposed to be at just because you trade SPY and QQQ every day. It don't work like that. We cannot be ignorant to or uh don't use the word ignorant when you at work. I learned last year that that offends people. Don't be um blind to what's going on around you. We have to know. We gotta know. And you know, it's the GPS. It tells us where it is that we want to go. Oops. Now, the big takeaway for today is that the FOMC isn't just watching the numbers, they're managing how the entire country feels about the economy. And we feel like we hate it. They want people to feel confident, not reckless, and they want our businesses to grow, but not too fast. Ain't that crazy? So they're trying to strike a balance, and that's just not easy. That's why Jerome Powell is his hair white, not even gray, it's just white. The man is stressed. He's stressed. And the more that we understand what they do and how it just is a domino effect, you know what I'm saying? The better that we can prepare and respond in our own financial life. Like right now is the time for you to hoard cash. It's very much so the time for you to hoard cash. It is very much so the time for you to hoard cash. Now is very much so the time for you to hoard utilities, healthcare, all that good stuff there, okay? If you want to stay in the loop, I personally recommend just go ahead and check out the latest FOMC statement, and you can go straight on federalreserve.gov. And then, but you can go on YouTube too and just watch Powell's press conferences because they're posted online after each meeting and it streams live on the Federal Reserve's YouTube page, which I like their YouTube page too because they put videos out throughout the week. They release videos throughout the week, and I think that's pretty dope. Are there any terms that you all want me to break down a little bit more? Because I definitely want to make sure that this is not intimidating. You know, I want this to be approachable to y'all. It's not scary. We definitely for sure. For sure, for sure. For sure, for sure, for sure, for sure. We love this. And just, I don't know. It tells us where to go, where to be, what to do, who to sell, and who to tell to go to hell.
Alexandria, can you go
Yeah,
back over CPI, those matrix, see those numbers, CPI, um, unemployment, like that part again? Because
I
I do get caught up on it quite often. Like, oh, we looking for it to be this. We looking for it. If they say this, then this is good. And how they correlate with the market.
got you. We're going to start with this video. and then backtrack. I might be a little wordy. Hmm. Hate to be the one to tell you that you will never be able to buy L for $1 again. And after listening to that earnings report, apparently it's because y'all don't wash y'all's face anymore. But also it's this thing called Consumer and Producer Price Index. So let's talk about it. CPI is the government's way to check if everyday stuff is getting more expensive. So we're talking food, rent, gas, self-care products that y'all need to go buy so my portfolio can go back up. If prices are going up, it tells the Federal Reserve that inflation is still alive and well, and they probably need to keep interest rates high. That's a lot of pressure, and the pressure is getting worse. If CPI comes in hot, typically we see the stock market drop. And if CPI comes in cool, get out. Hey, Wall Street's pretty happy this month. Now, PPI is the cousin that comes in before CPI. It's simply tracking how much businesses are paying to make the things that we buy. It's like elf producers, if they're having to pay more due to issues like tariffs, guess what? It's going to hit the consumers next. Pretty much say that PPI walks so CPI can run the same way we be running away from that register. Amen. So tomorrow, I need y'all watching this data like you was watching Donald and Elon's divorce last week. I know you can do it, babes. History repeats itself, and Wall Street been like, pay attention to CPI. What? Okay. Come back, Miss Patrice. I got you, Tony. I got you. But come back, Miss
All right,
Patrice.
so I do. All right, so I watched this more than once because I'd be like, because I'd be studying you on. She doing this for reals for so many different levels. So when I watch this, and every time I hear it, my thing is, all right, we know what's going on. We know prices are happening. We know this dude don't know how to do math, and I can't figure out tariff numbers. So, uh, are we really in a place where we will ever see prices come down after they've gone up? Like I see it when it comes to stuff like gas. It'll fluctuate. In the store, sometimes I see it when stuff is on sale, and I just be assuming, oh, that's not a bestseller, so therefore they doing this, that, and the other. But the example you gave with like Elf, do we anticipate that, oh, you know what? Yeah. Or are we in a stage where because everything is so volatile and we don't know if this dude gonna be tweeting and now we got tariff war again or not, are we ever gonna not have all this volatility where prices can kind of settle and we kind of get some kind of calm? Does that make sense to what I'm asking?
Not in this administration, I don't think.
All right, that's what I thought. Okay, cool. You answered my question.
Yeah. I don't think so. Not in this administration. Now, as an investor, y'all, y'all know I grieve. I'm still grieving the Silk Press funeral. She should have been our president. Yeah, I mean, but yeah, okay, cool. Hold on, pause. Let me tell this to Cherish. Just because she was black and she was a female doesn't mean she was the most qualified, but she was more morally qualified than Trump. Because she probably wasn't going to be kicking people and arresting children and putting them in detention centers. Probably. We don't know though, because apparently she was lying to us for 4 years too. I'll tell you about that in a minute. Boy, I tell you, I read anyways. Well, now I'm gonna go ahead and tell you now. Yeah. Apparently they knew President Biden had cancer 2 years ago and still tried to have him run again. Exactly that, sister. Exactly that. So that's how we ended up with who we ended up with. Now, under this, as straight as an investor and an economist, what President, don't look at me crazy when I say this. What President Trump is doing is good business moves. I said, don't look at me crazy. It's good business moves because he wants the US to stop depending on foreign countries. So that the reason why food is so high right now is because we import most of the food, or most of the food is exported from foreign countries. And with tariffs, they don't want to send us nothing because now they got to pay us extra stuff, right? So what Trump is trying to do is make us independent to our, like, an independent country, basically, which is smart. He's being a bully as he's doing it. He's not making any friends. You feel me? Yeah. Okay, period. Okay, I'm back over here with y'all. Let me read y'all's chat. That makes sense to y'all too? I mean, y'all are obviously very intelligent, but y'all feel me? I can agree with that. 1000 agree with his business mindset. Yeah. He's business oriented. As a businessman, he's running the US as if it is a business. He's just forgetting that we are the ones who are paying for the business he's running. Yeah, but okay, so now Miss Tony asks, you met Tony, right? Yeah. Yeah. So yeah, I think y'all met two wins. Anyways, so she asked, why are we staying away from oil? Because usually they know me. I love trading Exxon and Chevron and all that stuff. But now I'm telling them, mind your business a little bit. And it's a great question. And the reason why, um, it's like I'm not avoiding oil because it's a bad asset class, but because right now the setup just isn't giving what it needs to give. Because the Federal Reserve is still holding interest rates steady. So while they've talked about cutting later this year, and they haven't actually done it yet, we're supposed to have already had a rate cut and they haven't done it. We halfway through the fiscal year. Fiscal year is just January to December, just a full year. I like to say fiscal because it makes me sound smart, but you can just say for this year. But so like we're still under a lot of pressure, our economy. The high interest rates slow things down. And when the economy slows, demand for oil tends to slow too, especially when they over there beefing over it. Hey, another reason is a big part of oil demand comes from China. Their economy is softer than expected, child, and they are not recovering the way that they usually do, which means that the global demand for oil isn't as strong as it could be. And looking at things like OPEC data, that comes out every, ooh, when does OPEC come out? Not OPEC's, which we had yesterday, but OPEC, OPEC, in the natural gas report. The natural gas report is every Thursday. And I love to trade the energy sector on Thursdays and Fridays because of that report. And it's just letting us know how much supply of oil the US has, and natural gas as well. And I can't remember OPEC. I want to say that's once a month, but I'll circle back to y'all on that. But just all that stuff, it ain't good. It's showing us that the global demand is decreasing. And then the third reason is these damn tariffs. I mean, Powell even said it in that last press conference, and that's important. He's not going, he's very cautious with his words. So these tariffs are making things more expensive, making them slower to trade, and it's creating like a lot of uncertainty. And we don't trade oil prices when there's uncertainty. We mind our business. And then also the last reason, war broke out in the Middle East. There's a global conflict. Okay. It hasn't been reacting how it normally would. We typically would see oil spike, but oil started to reverse. And not only did it start to reverse, but on the lower time frames, it had a continuation of said reversal. Hmm. Hmm. Pretty much just shows us that the market knew about these headlines weeks ago. All right. And so it's much like I posted, I think I posted it in this channel. Yeah. And this was was this last weekend? Yeah. Ignore the news this weekend. From looking at the charts, we're gonna see some sort of agreement soon. I'll be damned if they're not talking about a peace treaty. I understand. So when it starts to show some strength again, or when the economic conditions line up, then we'll look at it again. But for now, it's just time to chill. And because the risk versus reward, it just ain't, it's not giving us like clean high probability setups. But it is going to have us flipping over into other areas like AI and utilities. The market is going to start bum rushing money into there. They're going to be trending better. So it's not know the oil for forever, but just know the oil for right now. And so I want to show y'all, and we'll put it on here too. I just put this on Threads this morning talking about oil. I don't know how to get to like my page here, so we'll just do this. Okay. All right. I'm just read it real. It's kind of wordy, but I got it. I'm not a geopolitical strategist at all. I'm just a woman who watches money move, and this is what I saw this week. Oil just dropped after a temporary ceasefire in the Middle East. And if you think this is just gas prices at the pump, you're missing the whole play. First off, hell yeah, the ceasefire matters because war disrupts oil production, shipping routes, and our investor nerves. So even a 2-week pause sent oil prices down and the global stocks went up. The oil driving might sound like good news because it's cheaper gas, but it's really a ripple effect. Anytime oil falls too fast, it's a pressure release. So we're thinking, yay, gas is cheaper, but the market, it's a reset, which we know that because the energy sector just came off of these major lows. We know that from looking at the charts that it was already resetting. So we're going to start to see money move out of XLE, which is the ETF for the energy sector, and into high beta plays like tech and airlines, y'all. But show them airlines because who the hell was buying up the oil when it was at those lows? Airlines, John Deere, the railroads, the people who need the crude oil at lows, right? So we're going to watch opportunity rotation. And that's a real thing. We talk about sector rotation and seasonality a lot, but opportunity rotation between the sectors is a real thing. Y'all let me know if y'all want me to, that would get into my nerdy side, but I would love to teach y'all that if y'all want to learn it. So let me know. Some folks, me, we already repositioned. We're watching ETFs like XLE and oh my gosh, how long have we been talking about jets? They flip-flop back and forth. So I'm watching jets because when the energy cools off and volatility drops, big money loves running riskier sectors. And there's a couple of y'all on here where I asked y'all to chart the airlines going into next week. Let's go on and get that ready. There's a reason we were already sitting in American Airline for that expires in September. If the Fed sees lower energy prices, that's pressure off future rate hikes, meaning that tech stocks and growth plays could start breathing again. But remember, this is a pause, not peace. Smart investors don't just react to headlines, they zoom out, find the trend, and protect their capital. Every chart I pulled on oil shows a key support test. It is at a pivotal if then either or level right now. Every energy stock that I pulled up. If it holds, it might just be a dip. But if we see the conflict heats up again, and then we see that oil spikes, XLE starts to run, we're back to flight to safety mode. No Boeing. You want to keep your eye on XLE because it's going to let you know when you need to get into defense mode with your portfolio. So if oil holds support, I'm going to go long on XLE. If oil breaks down, I'm going to grab some momentum plays on Delta, United Airline, UPS, and Jets. And then just because I know people I just summed it up. And as y'all see, they preferred that. Basically, what I'm saying is playing the Jets bounce and then the XLE reversal and just wait. We're gonna be able to play both of them. And we'll be able to do long swings from now to the end of the year. So get that in. Did that answer that for you, Tony? Let me know. I'll say it again in another way. Definitely here for okay, period. Yes, I would love to do that. Yeah. Okay, cool. Period. What else we got? Are you sure I answered that for you, Miss Patrice? Like you with the CPI and PPI and
Yeah, it got to where it got to the question I was getting at. Like, for me, I'm watching stuff and being like, because I'm extra cautious. I'll lean more to investing than trading when it's extra volatility and I can't watch it. So I'm like, girl, it's just gonna be you just gonna be in volatile crazy. So go on, do what you're supposed to do your study and get yourself back in so that if you know what you're watching, and then you talked about seasonality. If you can watch the sectors and you do stuff like that even if it's just paper till you get comfortable again, go do what you got to do and make your little bit of money trading, but still keep your eye really sharp for investing. So you answered my question.
I'm gonna show y'all this.
Can I add to Miss Patrice's question there? Because I know when I see PPI and CPI data in the, when once it comes out and it's, real versus actual, and I always ask myself, well, is this good? Is this bad? So I'm still having trouble with understanding when we have a good report versus a bad report on CPI and PPI.
So we wanted if CPI is saying how much the consumer is spending on gas, And if the CPI read in June 2024 said that it was like 2.5%. And then for June 2025, um, the analysts, the economists are saying, all right, we should, CPI should come in around 2.3. It should be lower, according to what we seeing out here with these numbers. But then CPI ends up coming in higher than expected. That means, damn, we spending more money than even the economists knew. That's bad. That's bad. If CPI, using the same scenario, they expected that CPI would decrease to, like, the data would decrease to like 2%, right? And then it ended up coming in at 1.5%. It's like, damn, we spent even less money than what the economists thought. That's really good. So it just depends. Right now, we're in the season, right? Because this is like one of the first times that I know of, from everything that I've studied, that I know of, where we have interest rates have been 6%. Y'all let me know, and I'm not even making an age joke. Like, have interest rates ever been like up here at 6% before? I don't think so, right?
No, interest rates been 7 and 9% and stuff like that. Yeah, they've
Oh,
been higher than that before.
oh, okay, okay. All
Yeah.
right. Oh, well, yeah, I guess the house 2008 was probably a
But
bit pretty high.
yeah, yeah, 2008 you saw some stuff, right? But it's been a minute. The issue is we've been living in um we have been living in, 2 and 1% and all this kind of
Hmm.
stuff so long that, you know what I'm saying? When people come of age, it's really like, man, we so used to that. This right
Hmm.
here is like clutching pearls, especially when you add in a new technology like AI and you talking about, well, who gonna have the jobs and all this other stuff, and then they firing people. It's like a perfect storm. So
It's
a,
been
a lot of that is really
sorry.
what you say, Andrew?
I was gonna say it seems like it's been the perfect storm since the pandemic.
Yeah, it was the test run, but I ain't gonna conspiracy going on mute.
Hmm. Just, I mean, it's like the chicken and the eggs. And I'm just going from 2020 to where we are now. It's a chicken and the egg. Like, what screwed us over more? The pandemic and import export, supply and demand issues, or the stimulus checks? Or all. Mhm. But I wanted to show y'all this. So I sent this to somebody this week. She mostly trades. I mean, she mostly invests. She'll get into some swing trades and every now and then. But I'm gonna let y'all read this. I sent her this, and just to be real. This is truly how I feel. And the beauty of it is that I get to hire people to come in and do what I'm not gonna do. I'm not sitting down to day trade every day. I got 5 kids that I didn't even push out and 2 dogs. I'm good on the day trading. Maybe it is because I do pay attention to geopolitical news and the economics and all of that. But I don't think that's a bad thing because I'm not blind to the fact that we got some crazy stuff going on right now. It's been a long time since the US was run like a business, like a corporation. Let me say it like that. In my opinion, been a long time since it's been run like an actual corporation. And I also think whatever the next administration is, if they backtrack on anything, that's something else too, right? Since 2020, we've just been going back and forth. It's like, all right, let's make this the law. Nope, never mind. Now we in here. So, I mean, hell, we really even before 2020, really 2016. This the law. Nope, no, it's not this the law. Now we're back in office. This the law. Nope, now we're going to take that back. How the heck can we get balance with that? That's hard. So I think the next administration that comes in, that will matter a great deal as well. I do think that we'll probably have someone younger because there's just no way that a Republican will be in office again. I don't see it. The Democrats and the centrists feel very strongly right now. You even got some Republicans are, there's like red, me. No, 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 no. I voted blue. Look at my bracelet. Yeah. Like very much so like that. So I do think that we would have a Democrat next one. And it's just hopefully it's not a Democrat with an ego, but one that would work off of what the current administration is doing. But I guess we'll see. But I have felt really good playing the long-term game. Um, I ain't really had a red portfolio this year. And I feel like that, especially, the ones who were with me, we made sure that we rebalanced our portfolios. We made sure we were diversified. We made sure we didn't have majority tech in our good gosh darn portfolio. Because now look, all right, them boring companies is keeping me green this year. And so where maybe in 2024, maybe I was pulling in like 8 to 10 grand a week just from the stock market, and that's investing and trading. It's definitely looking like about 6 or 7 grand a week, which is definitely why I be at that laundromat. Definitely why I be up there and I'm always in the car because that money ain't coming from the market. Not for me. I'm not gonna go get it not out the mud, not like this. That's why I do like this, and I'm leaning more into bonds. So I'm excited to talk to y'all about those and how to buy like the treasury notes and all of that. Because again, is my money coming in as fast as it was when day trading was quote unquote clear to do? We were trending more often than not. No. But am I consistently making gains in safe places? Yes. And shout out to that dividend portfolio we started in January, right? As I look through that one big, beautiful bill, I have that same fear. And as I look at government website sites, it looks like so much more marketing instead of governance. Yeah. So there's a lot of companies that, you know, everybody thought Tesla was about to go to 1,000. Now they divorced. And he has a new trillionaire buddy, Jeff Bezos. But then we looking at Jeff Bezos and he owns, which one does he own? Learning about bonds would be good. Okay, we can do that Wednesday. Jeff Bezos owns, I'm gonna say, is it Washington Post or New York Times? Do you know who Jeff Bezos is? I've heard of him. He owns Amazon. Oh, he owns Washington Post, period. So then he got a deal with, or he did a partnership with New York Times. I'm looking that up as I pull it up. Yeah. New York Times and Amazon announced an AI licensing deal. Sir, what? Don't you own the Washington Post? What? Brings the paper's content to Alexa. Now, even more so than that, you're going to be able to go onto the New York Times website, and instead of reading it, you're going to be able to say, hey, New York Times and Amazon AI, summarize this report for me. I'd be damned. I'd be damned. I'd be damned if I ask AI to summarize a news article that's already biased for me. That's owned by a far right. Please. No. And he didn't even, why you didn't do it with Washington Post? You own that one. Enough said, there's some companies, of course, Magnificent Seven, that's gonna consistently get my money. Let me reword it and put it like this. I'm so heavy in these ETFs, mutual funds, index funds, and dividends. Baby, I ain't even buying that now company. I even cooled off on buying Elf. Cause you got some issues apparently. And so do y'all, because y'all not watching. I'm just maybe not y'all, but I'm just saying. Because it's not $1 anymore, it's $18. But anyways, y'all know what I'm saying. Y'all feel me. I'm very much so in the baskets, managed funds, which means I'm going to end up paying more in taxes. So I'm adjusting for that as well, putting out more products with the Academy and with Wall Street Ben Black, because I'm making less and I'm going to have to pay more because of the type of investing that I'm doing now. And I guess that just brings me back to why I could circle it back and wrap this up with a nice, pretty little bow of knowing how, why, and what this affects. All of this that we covered today is very important because I've been protected. We have been protected, whether you physically did it, you got up and you did it, or You've just been with me since we've been talking about, hey, we need to adjust our portfolio since what, August? We're coming up on a year of us talking about this now, and look how it's been able to play out. You know, again, I'm making way less money out the market weekly. My God. But it's consistent gains, and I'm okay with that. I'm okay with the slow grind. I definitely leverage them 7 streams of income. Definitely, 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 definitely. That's why I put that app out. Going and, let's get that going. I'm about to start learning some of the classes at the academy. People can buy it, like, yes. Mhm. It was time to adjust. I'm gonna go ahead and stop the recording, and then I'll see if y'all have any more questions. And Miss Patrice, tell these people y'all gonna have it on Monday. Y'all know I barely know y'all on Saturdays unless I fail to know y'all during the week.